Hello everybody, hope this works. I am on location here a little bit today and we're trying a couple of new things to make sure, I don't know, we can be in touch and let you guys know what's going on. So this is OCTA. We're going to talk about money inflows and some other things that we see in the marketplace. So testing 1, 2, 3, I assume it is working. Channels about math, money and freedom, and none of this is financial advice, of course. So the story today is we're just going to talk about the market situation. It is extremely volatile, up, down, day to day. And let's talk about where we are. So first of all, the two hot spots up today are Ethereum and Dogecoin. I guess Dogecoin is pumping on the news that Elon has managed to snag Twitter, which is impressive. And maybe people are believing that Doge could be the currency of the cryptoverse and social media and everything else. Because one thing about Elon Musk is he's very determined about whatever he wants, he gets. Who knows? And maybe Doge is pumping because of this. And you know, if Doge pumps enough, technically it could nearly pay for the Twitter acquisition. So it's ironic. I'm playing with some numbers in my head right now. So let's talk about the good news. For the next few days, I'm going to be bouncing around, so I hope everything is okay. But the big news of today is Fidelity. And let's jump into this slide here. You can see here Fidelity plans to allow savers to put Bitcoin into the 401k accounts. As you guys know, Fidelity has more than 20 million participants in their retirement funds, worth about 2.7 trillion in assets under administration. And they will allow clients to put up to 20% into Bitcoin. By my rough calculations, that's about $54 billion. The question is, what is the impact on Bitcoin price? And as you know, I've calculated it. So assuming just, pop this up here, assuming just 2% of an asset flow of all the money that these people have, millions and millions of customers, that would result in about 54 billion going into Bitcoin. And using my multiplier of 21, the impact on Bitcoin market cap would be about 1.13 trillion, and the impact on Bitcoin price would be 81,000 on top of the 40,000 approximately where we are today. So this alone would put Bitcoin at $121,000 by my calculations. Remember, it's not going to happen all of a sudden, but it will be gradual, and let's just wait and see. Now, some other stuff that's happening is, if you look here, over 1% of Bitcoin is now in the hands of public companies. This has grown significantly from about 325,000 Bitcoin in January 1st, 2020 to about 1.44 million April 2022. Now, that, when you look at those numbers, that 1.4 million, as you know, I always speak about how Bitcoin, there'll never be more than 14 million of them. Over 1.4 million, which is over 1% of the supply, is now in the hands of public companies, which is substantial. Now, related to that, I did talk about this in March. The GBTC discount has begun to narrow, and the question is why? And I always said, well, we'll know if a Bitcoin spot ETF is coming because the big money will jump in there first. Here, you can see the chart from Arcane Research showing the massive uptick in the reduction in discount of the GBTC premium. Now the question is, perhaps Wall Street knows something? Is the market already pricing in an ETF? We don't know. We shall see. Now, speaking of GBTC, Grayscale have plans to expand into Europe. They run about $30 billion in the Bitcoin Trust, and they are beginning to move into Europe, according to Michael Sonnenschein. Now, the competition in Europe is already very intense. There's a whole bunch of ETPs, which are like ETF equivalents across Germany, Switzerland, and Sweden, and other places. So they might be a little late to the game, but still, it'll have an impact. Now, speaking of that, let's look at institutional money flows and what's going on right now. So Bitcoin saw minor inflows totaling about 2.6 million last week, although the month-to-date outflows remains at about 178 million. Which is kind of staggering. Ethereum continues to suffer with the third week of outflows totaling 16.9 million. Not a lot considering the size of the asset, but it is substantial. But that 16.9, I always like to see patterns and numbers. Get this, the outflows year to date are 169 million. 10% of that total outflow happened in the third week of April. Now, altcoins remain the focus amongst investors, with notable inflows into Solana, as usual, Avalanche, Terra, and Algorand of 1.8 million. No, I think, hang on. Solana, 0.8 million, and the rest, 1.8 million, 0.7 million, and 0.2 million, respectively. And the short Bitcoin investments products saw minor inflows last week, totaling 0.4 million. Not a heavy bet on the shorts, but important to monitor nonetheless. Let's look at the options action right now. We still have that huge action. Like, we were pretty confident based on the big option bets that Bitcoin could hit 50K. We got close. We got to 48,000. We missed by 2,000. Then it fell back down, and you know where we are now. But the Bitcoin bets will lose for April 29th expiry, and they were all the people that had that big bet up there. So that is a little bit surprising. Market is way weaker, but we have a lot of shocks to the system as well. Let's talk about stablecoins real quick. USDT was the entire stablecoin market up until 2018. You saw all that purple on the chart here, and the landscape has matured to the point now you got several providers competing for adoption. If you look at the growth in USDC, that being that reddish color, and then UST, the purple, which just eclipsed BUSD, the green. And these things are nothing short of amazing in terms of how this landscape is changing. Now, I think UST has carved out the most significant portion of the market over the last 2 years, about 24.8%. No, the USDC, Binance, and UST are now at about 24.8%, call it 25%, 9.7%, and 10.2%. The 10.2% is bigger than the 9.7% of Binance. And UST has doubled in market share over the past year due to increasing activity on the Terra ecosystem. We'll talk more about Anchor soon. Now, let's look at the property index, which is also stunning to see. Here, the following chart, obviously up and to the right, completely parabolic. The chart shows the index levels for the US national 10-city and 20-city composite indices. And I've been watching the Schiller index for nearly 30 years now. I've never seen anything like this. And the average home prices are up 20.2% year over year in February 2022, which is pretty stunning. And that makes it so hard for new home buyers to come into the market. But let's look at another unrelated item. We'll talk about some mortgage rates in a second under a different category of the bad. But in final piece of good news for today, mining energy are not only more efficient, but more stable. And this is an article from Prime XBT. And I think they showed a 63% year-on-year increase in efficiency due to advances in semiconductor technology, like the Intel chip and some of the new ASICs chips that are out there. And moreover, apparently, according to the survey, the sustainable power mix of energy use is about 63%, which is way beyond the 50% tipping point that Elon Musk was looking for before he would accept Bitcoin as payments for Tesla vehicles. So fingers crossed. Now let's switch gears real quick and talk about the bad. The bad so far, not much, well, a little bit, but not too much. First of all, the Ethereum. We did talk about the institutional money draining from Ethereum, but the options action still looks really, really bearish right now. If you look at all the purple bets to the left of the max paying price at 3,100 is kind of extreme, and the put call ratio is balanced, which is typically bearish because more people tend to be predominantly bullish over bearish, and when the put call ratio is equivalent, that is an unusual situation. Let's talk about the max pain for Bitcoin and ETH while we are here. The Bitcoin options are worth about 2.2 billion, set to expire this Friday, and the Ethereum options are 1.2 billion. Very similar how nearly half of the bets are in Ethereum, which is directly in proportion to the relative market caps. Now the max pain for Bitcoin is 41,000, and the max pain for Ethereum is 3,000. So we'll see where we go from there. By the way, I hope, let me see, built-in microphone, whoops. I hope the sound is okay out there. I didn't even check. I'm using a different mic, but I don't even know if it's working. Let me just check real quick. Yeah, okay, looks like sound is good. I should have checked that before, but I didn't because We're just hacking this together right now. So that is the Bitcoin expiry. Now there is a little bit of bad news as well. The Australia's first spot ETF is delayed, unfortunately, and the reasons for that is apparently there was some delay because of undisclosed third-party broker, which reportedly blocked the products from going live on the CBOE and Australian exchange. Interesting. I wonder what that broker sells if they don't want this product coming to market. Always think about the angles as to why, what the incentives are for people to take this type of action. Very shocking. So in other news, if we look at mortgage rates, this ties into the real estate piece I discussed earlier. The Schiller, the price of real estate is still exploding, but the 30-year mortgage rate rises to 5.11%. It's over 6% for non-conforming mortgages. This is the highest level since 2010, 13-year high. Now, what's crazy to see is the mortgage has doubled since our bottom late last year. Doubled in price, and that is stunning. So the question is, what's happened? What's going to happen next? And big thank you to Charlie Biello. Now, in terms of the ugly news, not too much ugly news today, which is good, except the New York Bitcoin mining plan. New York bill banning proof of work crypto mining poised to advance, which is not good. Again, the state assembly needs to get their heads together, or this will be a real ding to actual Bitcoin mining in the state of New York, and another ding as well. It looks like there will be states that will advance forward and states that will go back, and it looks like Texas is going to take over the world. So let's talk about a couple of charts. Not too many charts here, a little short on time, but you can see the ascending channel for Bitcoin did fail. That was my green line there. We have penetrated it twice, and that is not good news. So it is looking pretty bearish at this stage. The question is, we had a beautiful bounce yesterday off the 38K support. Is 38K the new support? I don't know. We'll be watching this carefully. If not, we're going straight to 37K and potentially 35K. This is not good, despite all the crazy good news we have out there. Let's look at Tesla real fast, and I'll let you guys go. Tesla is completely oversold here. You can see it's dropped way outside the Bollinger Band. We are still above that ascending support line, the green line that I have in my chart here. You can see a couple of things do look bearish, but we always say, you can get some Tesla at 850, that's a good long-term price considering it's going to $1,600. It's basically half off. So obviously the market does not like the fact that Elon Musk is going to be distracted with Twitter. That's a big part of this actual sell-off. Speaking of sell-offs, let's look at Netflix. Clearly way more volatile than crypto. This asset is down 72% in a matter of weeks, which is stunning. And if that happened to your crypto, that would be bad. But again, I think it was the Binance CZ CEO said that crypto is now less volatile. Bitcoin is less volatile than most stocks today. So with that, everybody, hope you enjoyed it. Quick and dirty today, and I'll see you guys tomorrow. Thanks all for being here.